For our next topic, we have the rise of asset as a service, how flexible financing models accelerate the adoption of sustainable technologies. So please join me in welcoming the speakers. First, we have Michelle Capiod, co-founding partner at Blume Equity. Then we have Raphael Cattan, investment director at Eurazeo. Next, we have Frederik, Simoens, investment director, energy transition at Korys. And for our wonderful moderator, we have Vikram, Raju, managing director, head of climate investments at Morgan Stanley.
Hi, folks, and welcome to the session. Let's kick off by spending a few minutes doing a round of the panel, introducing ourselves and our firms, what brings us to this, before I launch into my killer questions. So I'm Vikram Raju. I lead a fund called 1GT. We're focused on the growth stage in climate investing across North America and Europe. Michelle?
I'm Michelle Capiod, a co-founding partner of a specialist climate tech growth fund called Blume Equity, invests in European climate tech scale-ups from Series B.
I'm Raphael. I work at Eurazeo, which is a large pan-European private equity firm based out of Paris but active across Europe, and I focus on the deployment of a climate fund of 400 million euro.
And I'm Frederik. I work at Korys. Korys is a family office based in Belgium, and we invest in several teams, and one of them is energy transition, and I guess that's why I'm here.
Great. Okay, so I'll start with you, Raphael. So everything is a service, right? Is this asset as a service something that's just another extension of that in a very annoying way, or is it something that's actually very cool and we should be glad that we're actually talking about it? So what's your most compelling reason to think about this?
I think that when we are looking at climate topics, there is a lot of we are not just talking about software. We are talking about people doing capex investments, and often with a large upfront cost, and that's costly. And people don't always have the budget for that. And so when they are looking for new solutions to replace fossil fuel or the status quo, being performant is one thing, and being also be able to have something which is simple for the customers and which doesn't require a huge upfront budget is also key for adoption. So this is how we are looking at it. How does this new business models can really create faster loops and faster adoption?
So what's the most compelling example of this you've seen?
I think we've invested last year in the UK into a company which is doing ground source heat pump networks. So basically networks on the ground for when you're building, let's say, 10 houses at the same time, so large campuses, university, hospitals, etc. And so if you want to replace a boiler, a gas boiler, you can do air source heat pump. But this is going to be not super efficient. Actually, ground source is much more efficient, but costs a lot of money. And so one of the tricks that they had is that they found a financing partner that could finance the upfront capex investment instead of the real estate developer. And so for the real estate developer, it means that it gets the cost of the real estate project, which becomes much cheaper. And then the financing is done by the future owners of the buildings, which are going to pay their bill to Rendesco every month, as you would pay your gas bill every month. And so they have a financing partner which pays for this upfront cost, and because you know that you are going to have secure revenues in the long-term future.
Great. Excuse me. Michelle, we were talking outside, and you suddenly brought up the 1960s. What has that got to do with this?
Well, I think asset as a service is not a new concept. I think it's something that has existed since the 1960s. Back in the day, Rolls-Royce introduced power by the hour in the aviation industry, essentially renting out engine hours to aviation companies. And I think there was a lot of hype at the time, this is going to become the next big thing, but there are a number of hurdles to actually get this business model off the ground. And so as promising as it is, especially in this era where we have amazing technology innovations. We need to use resources more efficiently. We have pressure from a regulatory perspective in terms of a circular economy, which gives a lot of hope to this business model. It's not straightforward to get customers to understand it, who takes which risk, and the key piece is obviously, who is best placed to get financing at the lowest cost of capital. And I think this is really where, in order to make this a great success, you need to get the financing industry to provide attractive capital solutions to startups. And I think that's a little bit the challenge. We're kind of in the infra and VC space where, you need to kind of break out the asset and the kind of low cost of capital versus the real upside in terms of the more, data services that you can layer on top. But I agree with what you said, Raphael, in terms of we've seen a few really good examples in the energy space around battery storage solutions as well, and very, very innovative financing solutions as well in terms of companies not going to traditional banks, but even going to the likes of pension funds who have a relatively low cost of capital, setting up essentially fund structures to fund the capex element, and then essentially having a subscription model for end consumers. So I think a lot of promise, but there are some challenges as well.
And we'll come to that. So Frederik, you were talking about C&I earlier, so say more.
Yeah, I think if you look at it from a customer's perspective, and as a service model makes a lot of sense, of course. Like for instance, indeed in the C&I world, I think there are a lot of companies who definitely are not experts on energy, but they all know that they can probably optimize their energy consumption, they can probably optimize their ecological footprint. But like I said, they don't have the knowledge on how to do it, and they don't have the financing either, because they want to deploy their means and their business and not necessarily in how they consume energy. So I think for them, having a turnkey solution where basically somebody offers them, like you said, batteries, solar, maybe even heating, as a service, and optimizing that for them and making sure that they optimize their self-consumption, make sure that they load the battery at the best moment and unload at another moment. I mean, taking care of all of that without the company having to make a financial investment, having to make an investment in the knowledge on how this all works. I mean, it obviously makes sense from a customer perspective. But I think we'll later also discuss whether it makes sense from the other side to offer the solution. But I think from a customer perspective, it definitely makes sense to have a solution like this.
Yeah, it's great for the customers, right? You don't spend any money up front, you get this whole thing paid for, and you get to benefit from it over time.
Yeah.
What could go wrong on the other side?
Well, obviously, when you offer a service like that, you have to make sure that the numbers match, right? So I think you have to be very careful, make sure that your model is accurate. So when you assume certain parameters, make sure that over the long term, these will also hold. Like we see a lot of companies offering solutions involving flexibility, trading on flexibility. Mm-hmm. Prices have been elevated in the past, might still be elevated today in certain countries, but they might go down as well. And then, of course, you must make sure that your financing model still makes sense. So I think it's more important to really focus on the fundamentals. Like the fundamental thing is with renewables, there's going to be oversupply and over demand when there's no supply. And bridging that gap is something that will remain. Whether flexibility prices will be high or low, I wouldn't count on that. I would just make sure that you capture these swings in energy prices over the day, for instance, in summer times, and build your model on that. So having the model right, I think is very important. Another, I think, crucial element is make sure that you have a differentiation when you offer a service like that, because otherwise it's a race to the bottom. I mean, the assets, everybody can buy assets, finance those assets, and offer them as a service. But it's in what you do with the assets that is important. So I think it's crucial to have the right technology to optimize the use of those assets. To make sure that you can earn more with the assets than anybody else would, and as such make sure that you are competitive and that you have enough differentiation compared to to other offerings.
So getting your modeling right and being able to sweat the assets. We'll go to Michelle and then to Raphael. What do you think are the other concerns here where this thing could break? When does this break?
Yeah, I mean, I think one of the other concerns is obviously around whether your customer is ready. So I think a lot of consumers definitely are, but I think there is also, if you think of a more B2B approach, moving from a CapEx to OpEx, you're dealing with potentially a different set of people, different approval levels, etc. And so you really need to do the homework in terms of understanding, is this something that will work? On the headlines, it makes a lot of sense, because if you have a more expensive technology solution and innovation that is on the pricey side compared to the incumbent technology, then if you can break ground by just needing a small budget, that makes a lot of sense. But you also need to make sure that there is readiness in various departments that are held by different budget holders. So I think that's something you really need to understand before you decide to launch into this kind of business model. And then the other side is obviously to think through, from your perspective, it's great to have recurring revenues. Investors love that. From a story perspective, especially in the VC world, anything that is kind of recurring revenue, long-term contracts makes a lot of sense. But then you need to think about, how am I going to fund this? You're going to have a pretty big expense, and you might actually find that you are not able to meet your demand because you just don't have the capital to actually source the assets that you need to sell if you don't have the financing behind you. So I think that's really, really important to figure that out early on, and to make sure you have financing partners that can help you scale, so you don't get stuck with demand but inability to supply, which obviously will not go down well with your customers.
So you could be a victim of your own success.
In some ways, yes.
I think what's tough is that the devil is often in the details in this kind of businesses. And like designing the really right business models with the right pricing with your customers is super important. For instance, if you are developing, we had a company which was developing an energy service company. So basically, you put the upfront cost, I don't know, for new lights or new HVAC, and you are generating revenue on the savings of the customers, defining what's actually a savings compared to year -1, year -2. How do you define the baseline? Does the customer continue to accept it, or does it at some point renegotiate? That's often something which is tricky. Going back to the flexibility topic, if you have indeed, if the customer is paying something of a fixed fee, but at the same time, the savings that you generate through flexibility are going down just because the electricity markets are being crowded. That's also something where the customer may not be happy. So one needs to find the fine line in terms of business models.
All right, so thinking through all these sort of scenarios into which, how this actually gets paid to you, whether you can actually finance a scale up, whether your, modeling is right, or whether you have differentiation in order to be able to sweat those assets. Those are all things that are coming through. We've blown through, a few of the questions that we had, but let's turn to the audience and say, is there anyone here who has an asset as a service model and has any questions for the panel?
I think someone is.
I can't see anybody, but my vision isn't great. So just shout if you do have a question. If you don't, let's go back to, these are all things you would say to when you're evaluating these models, right? When you are looking at these, are there particular industries or particular sort of sectors or subsectors where you think this doesn't work?
When you are working on very small assets and consumers, I would say this is tougher than for B2B businesses. For instance, people in asset financing don't like to finance very small assets.
Define very small.
Like, for instance, bikes, 1,000 euro. So we invested into a company which is doing e-bike subscription. It took a lot of time to be able to demonstrate the IRR that you can get on this bike to be able to get asset financing. We've managed to get it, but it took 4 years before we were able really to get it. And then the pool of capital that you have available is less important. Just because these guys, they want to deploy capital, and for them, like 1,000 euro assets, bikes, I mean, they are in the streets.
That's a lot of bikes.
They are fragile,
Yeah.
and you're talking to consumers, so a bit less reliable than businesses.
Yeah.
So that's tough. Yeah.
Yeah, I think the important thing is you need to see it as an investment, right? So putting a few batteries at a company or putting an entire solar panel roof at a company is an asset. Putting something at a consumer, I mean, you never know what consumers will do with it. So it's a lot more risky. It's probably also less bankable if you want to leverage it a little bit. So yeah, I fully agree with you that consumer segment, residential segment is probably a bit more difficult to make a viable business model out of.
On account of the smaller ticket sizes, the larger deployment time, and the availability of bankable finance, right?
Yeah.
I think the longer the contracts you potentially can sign as well, the more bankable, the lower the cost of debt. But I think there's always this chicken and egg until you've reached a certain minimum scale, and just years of data, it's quite hard for the traditional banking industry to underwrite. So it's often a case of equity funding the initial journey, right? And then essentially proving it out. And how do you get that transition to work? So I think it's really important to think that through early and to be very clear from the outset in terms of what risk who is taking, both in terms of, who is, if you're providing an SLA, if you're saying I'm going to have uptime here, who takes that risk? If you have funding from a debt provider, you set up an SPV, for instance, to own the assets on your behalf, and then you take essentially just a portion of the of the monthly payment. So there are lots of things to think through to make it viable, and I think there are a number of pitfalls that are perhaps not necessarily something you think about. You get started, and then you realize down the line that actually this is not quite working. So definitely something that I would flag.
Regulations is also tricky.
What's that?
Regulations is also tricky. If you're selling a product which is regulated because you get subsidy, for instance, subsidy might change and become less favorable sometimes if you are leasing the product and not buying it, for instance. I don't know if regulators always have that in mind when they are making laws. Often they don't. But so for instance, I know that in Germany, when you were buying solar until recent times, leasing was quite favorable. Now, if you want to get subsidies, it's something which is a bit more complicated because laws are a bit changing, and so now you need to own the assets to be able to get the subsidies. So that's also just something to have in mind.
Well, can't the owner of the asset take the subsidy and then pass it through in terms of?
There are probably ways to work around, but it can just be a bit tricky in terms of, or sometimes it's different VAT rates. Okay, a different VAT. For instance, if you're owning the asset and buying it versus if you're not buying it and using another system, sometimes you have different rate of VAT which applies in some countries. So also something to check.
I think the other thing is from a customer perspective, to the extent that you can pay only for your usage, that's incredibly attractive, right? But you then take the risk in terms of potential volatility if that usage goes down, and if you then have funding behind you, you need to be able to handle that volatility. But I think it's also that trade-off. How do I accelerate sales, make it really attractive, versus what risk do I take as the manufacturer or the asset owner?
Audience, again, I'm sure somebody here has experienced the problems that have just been described. Also, it's easy to get your first sale because you're dealing with a localized unit or a factory or a purchasing manager in a location. But scaling it beyond that to go to a region or go to country level or even multi-country levels often seems to be hard. Has anyone here experienced that? No?
It's almost the last session of the conference.
Or the problems we are talking about have not been experienced by these people, or maybe you aren't doing asset as a service but are interested in finding out. In which case, you should distill all these lessons about things to watch out for, because it looks very good on paper, but then there are practical difficulties, from regulations to getting the financing to getting the model right in terms of how you actually underwrite, getting the value from this. We're down to the last few minutes. I'll ask the panel if you have any sort of thoughts, additional thoughts, pearls of wisdom, before they catch their flights.
I would say if you want to start a service like that, it's obviously very important to have a good investor behind you. Can recommend Korys for that. I think having an investor that has knowledge in the domain, I think makes a lot of sense, because you also need partners. Like I said, you need the technology behind it. You probably need to find financing. I mean, there's a lot of things that you need to take care of if you wanna offer a service like that.
What about time horizon?
Yeah, well, also, of course, I mean, you need to, again, it all boils down to the model, right? I mean, you need to make sure that in the end, you're making money and you're not subsidizing assets for somebody else. So I think all that's very important. And also, of course, understanding really what the pains are. I mean, this is obvious, of course, but understanding really what the pains are of the customer. What are you really trying to solve? Like we discussed, I mean, he doesn't have the knowledge, he might not have the financing. Could be that financing is less of an issue, then you might consider another model. So I think that those are important elements as well. I mean, really tailor your service, make sure that you know who you're selling to, and also make sure that you have the right partners that you can offer the right solution to those customers.
Come to Frederik after the conference.
I mean, the other thing I would say is, obviously, you need to think about the cost curve. So take solar panels, for instance. The price has come down massively over the last several years. So if you've bought an asset at a price of 100 and you're going to lease that over a period of time, and tomorrow the price is down to 10, you may not be able to lease it at that price point anymore. So then it would have been better to sell the asset up front and to essentially de-risk from your perspective as well. So I think whenever you're looking at a rapidly evolving industry where the cost curve is coming down very quickly, that's the one thing I would, as an investor, be asking a lot of questions about.
Do you want to mention the deadly tariff word? Or that entirely and let people go?
Well, if you're talking about price of assets going down, I mean, if the tariffs are staying between US and China, China is probably going to try to flood the European markets with cheaper materials. So, I mean, good news for the energy transition, bad news for the European manufacturers. But I mean, it's likely that the prices of batteries and solar will continue to go down. Maybe just one point on for funders. I think what's key is to be able to define really the milestones to reach bankability and financing on your assets, and being able to have investors who help you define the journey about, okay, I launch a product which is asset as a service. Probably I finance it a bit with equity at the beginning. Do I try to find a bit of venture debt to be able to add on top of that and complement the equity? What level of venture debt? Because venture debt is expensive and is risky. So can be a good starter, but cannot be continued indefinitely. And then, of course, you are launching innovative products. So, okay, there is not tons of market experience, but being able to speak to relevant people to understand, okay, what are the milestones that they want to see in terms of profitability of the assets, in terms of bankability of your customers, in terms of counterparty risks. And so being able to try to have not certainty about that, but at least some insights what kind of loan to value can you get in terms of debt versus equity over these assets. And then that helps, because that's what the job that equity investors like us will do at Series A or at Series B when we are also looking at your case to invest into equity. So I think that's really important to do as much work as possible and talk to as many people as possible in this field.
Last chance to ask any questions. Doesn't have to be about this, but I have one question which we haven't, prepped. At Bilbao or in the run-up to Bilbao, what's the most unusual as a service thing you've come up with? So I'll get the ball rolling. So there was a heat as a service, which was interesting, but not that unusual.
We are looking at something that has nothing to do with energy at the moment, but which is in food production and essentially providing equipment to massively increase efficiency, which I cannot talk too much about just yet. We'll see if anything comes out of it. But I do think the applications and the business model can go way beyond the energy sector. I mean, we've seen obviously in transport with mobility, usage-based, EVs, scooters, etc. I think that's probably where we, from a VC perspective, have seen historically the most traction. Now it feels like, energy as a service it feels like it's happening. And it lends itself well to it. But I think equally, agricultural industry, you could think about equipment being rented to farmers or trying to turn to regenerative farming, et cetera. So I think it has applications well beyond the energy space.
Calories as a service. You heard
How
it
about that?
Yeah, maybe another example, it's not that special, of course, is related to the EV market. I mean, leasing models in the EV market is not new. But now you see models where they also deliver the energy with it. Like I think in the UK, there are certain companies doing that. And basically what they will do behind your back, they will optimize the charging of your car. And they know that they can do it better than if you would let it just charge at normal hours or whatever. So by the fact that they can do this all behind your back and optimize it when prices are low, maybe even play a little bit on the flexibility market with your car. They're able to bundle you a package where you
use your car as a
battery,
EV,
and load and even discharge it and whatever. And because they can do all of that, they can actually offer you a very attractive leasing formula where you have, you basically pay per kilometer that you drive or something, but everything included. And by optimizing the energy, they can actually offer much better offering than if you kind of separate everything, the leasing, the energy, the maintenance. So by bundling it all together, you can get to better models. So I found it quite interesting, and I think this is already happening, like in countries like UK and so on.
No, that's a brilliant example, as is the agricultural story. I'll leave you with the last word.
Definitely. Now, maybe double-clicking on the agricultural story, it's a bit of it's not exactly asset as a service, but we've done an investment into a company which is doing, which is building farms which is building farms and investing into capex for building a greenhouse and robots in order to automate as much as possible of the farm. And so here we are investing equity in order to finance the first large-scale farm. And we hope to be able to demonstrate the IRR on this farm in order to be able to get infrastructure investments, because the farm is around like 10 million euros, and to be able to get infrastructure investment in order to scale this. And because we see that there is a lot of land which is available by farmers going into retirement. So I wouldn't say that, I mean, we can call it farm as a service, but that's also something that you see where you have more and more infrastructure investors where they are able to see whether you're able to demonstrate like good IRR on the first or second project, that they are available to take more risks if their fund is not too big, we see more risk-taking, more investment into TopCo and AssetCo to be able to make this asset as a service work.
And where does it work? What do you grow?
Sorry?
What is being grown?
Fruits and vegetables, but they are particularly productive in the sense that they are, because they manage to automate large part of the work thanks to robots, you can mix cultures in a much higher way, at a much higher rate than what a traditional farmer would do. And so the yield that you get on this culture is really high. Because when you are growing all the time the same culture, basically the soil is less fertile, and so but if you are mixing cultures, which is like what permaculture is doing, this is very human resource intensive, and so what they've managed to do in terms of both the agronomy and the robots makes that you have a model which is profitable. So now it needs to be demonstrate profitability at scale. To be able to then scale on multiple projects.
Perfect. Okay. Any last words, or should I wrap with vegetable as a service?
I think we have a next panel waiting in the corner. So.
All right, folks, we'll leave you now.
Thank you.
Thank you.
Thanks to the panel.
Thank you.